Are there parameters that you could look at that tell you if Bitcoin's value is going up or sideways or down, or is the only thing that we can look at price? Hey and welcome to this video. My name is Julian. On my channel, it's all about making you crypto fit. I discuss the beautiful world of decentralization, blockchain, cryptocurrencies, general investing, and much, much more. I try to kind of look at this from different angles. On the one hand, as a CEO of a large group operating in a crypto space, obviously as an investor, trying to increase my purchase power, as someone who works with various regulators. And so I try to bring like a little bit of an aspect to that. If you look into normal investments aside of crypto, then all these investments, as soon as they're liquid, have a price, right? And you can track this price. It's very, very easy. But Buffett always says price is what you pay, value is what you get. So the question always is, how can you look at value? And there are different metrics, ideas, what you can look at. In general, we have cash flowing things like stocks, like bonds, like real estate. And what happens normally is you look at how much cash flow is produced and you look at how valuable is this cash flow. For example, if interest rates are relatively high, that cash flow is not as valuable because it's very easy to get cash flow simply by lending money to the government, for example. If interest rates are relatively low, this cash flow can be very, very interesting. But in general, you look at cash flow. With some other companies, you look at even some more fundamental things, right? For example, at Tesla key metric is always how many cars are produced. And so obviously the more cars per week, for example, are produced, in general, you can say, well, Tesla becomes more valuable. With Amazon, this was very powerful in 2000 .com crash. Amazon price got slaughtered, but at the same time, the revenue numbers went up, the number of customers went up, the numbers of purchases went up. So it's undeniable that the value of the company went up while the price may have gone down. Well, this is cash flowing. So generally, this is a bit easier. But when we think of non-cash flowing things, we could think of commodities. We could think of precious metals like gold, and we can even think of fiat. Yes, fiat is cash flowing, but most of the time that cash flow is inflation. And so it's also interesting to kind of counterbalance that. Sure, interest rate can have a net yield if it's higher than inflation, and some years this is the case, and in some years it's not the case. But we're going to look at all three. And then we're going to look at crypto, we're going to look at Bitcoin, we're going to look at Ethereum, we're going to look at DeFi chain, and we're going to look at some parameters there. So first, let's look at commodities. In commodities, we obviously have a price, there's no cash flow, but a couple of things we can look at is how much is this commodity actually used. So for example, if we look at oil, we can see, well, how many oil needing cars are out there, how much oil does the industry actually utilize. In general, and this is key here, this generally means that this commodity, or be it a rare earth or something, is used, so it cannot be put back into its original form. Now, obviously, this is important here when we talk about usage. Now, with gold, precious metals, this is a bit different because in general, gold cannot be used up. It can be used, but it cannot be used up because it's an element, and destroying an element is not really possible. Now, you can transform it, but with gold, this is very, very uncommon. But we can look, for example, how much gold is used for industrial use. We can look at how much gold is used for jewelry. Now, in theory, this can be undone, but industrial use or jewelry in general is not a price speculation. So this would be a very, very clear utilization. And these are kind of parameters that we could look at, right? So the more the Indians or the Chinese are buying gold for jewelry, well, in general, we can say the price can be very well supported by something else other than price speculation. Or if more iPhones are being built and they need gold, then, well, this also drives, obviously, gold usage. What about fiat, though? Is fiat only kind of used for price? Is the US dollar the only thing you can look at is relation to other currencies? No. The actual use of a currency is that of a unit of account. That's the prime and number one kind of metric. How much is the dollar used as a unit of account? And we have a very good metric for that, and that is GDP. the bigger, the stronger the GDP in general, the stronger the currency. The number one GDP in the world, US dollar. That is why it's the global currency. And other currencies obviously go up there as well. But in general, this is the number one utility measure for all these things. So you do have very clear utility numbers for all these things. And then we have crypto. And in crypto, the number one metrics that we always see from people out there are price metrics. People look at charts, they look at moving averages, they have the $200 moving average, they have a 20, a 50, a 200-week moving average. They tell you that the price has never crossed those things. But to be honest, these are absolutely terrible. To me, these are not really good parameters. They are just there because we are actually really struggling to find good parameters in the crypto space. And you will see this. Now, I have separated the parameters into three different types, into those that are really terrible, those that are okay, and then the gold standards. Now, the gold standards measure the actual utilization, and this is always the key, and you will see this. So let's dive in with this. And maybe before I do this, let me know what you think is the key metric to look at when we look at Bitcoin. What is the key parameter? What's the key measurement? How would you measure those things? So let's take a look here. Now, I have four really, really bad ones. The first one, anything that can actually be easily gamed by bots or by a cyber attack. And actually, Satoshi knew that, and that is why we actually needed mining, because he knew that it was impossible to somehow measure those things. For example, anything transaction based, because transactions are actually relatively cheap to make. So you can do a lot of transactions, and it doesn't really tell you anything. Also, the value that's being sent is a horrible metric because I could send a billion left, a billion right, a billion left, a billion right, and it doesn't tell you anything. Daily active addresses, also very difficult metric to use. Otherwise, Satoshi would have used these kind of things and would have said, look, instead of burning useless electricity, you have to make 1,000 transactions, or the more transactions you make, the higher your chance that you're going to find the next block, right? None of that is the case. So he knew that. Why? Because burning electricity is just really clear, but actually doing those transactions is not clear, right? Because it can be bots, it can be easily gamed. Now, some people mistakenly think that the hash rate tells you a lot about as a metric. And this is just LOL. I'm sorry. Hash rate is a consequence of the Bitcoin price, not the other way around. Now, I get it. To a certain extent, you need some hash rate, right? Because if you have 0, then this network is not stable. But after a certain limit, it doesn't really matter as much anymore if the hash rate doubles, for example, right? Like at the moment, the network doesn't become more stable just because the hash rate doubles, or even if it halves, it's not half as strong. This is ridiculous, right? It's so difficult already to attack it. And at the end, hash rate is purely a service provider that the network pays. So the bigger the budget, the more hash rate there is. And obviously, it's hash rate times hash price. So the hash price has been going down. So that's why the hash rate keeps going up all the time, even though the budget actually keeps going down slightly, just because hash rate is actually going up. So the key metric is not necessarily hash rate. So it would actually be the hash price. That's the key thing. And it's absolutely useless to look at that because that's just a consequence of the price. So looking at hash rate is just a trailing parameter from price. Doesn't really help much. Again, looking at price itself is just self-reinforcing. Just think about you use price as a metric. Then if it goes down, that means value is going down. That means you should sell, which would make the price go down even further. So absolutely useless. And then there's a lot of those blah blah statements, right? That are absolutely not measurable, and people love having this. Like, oh, we need to measure decentralization, or the best thing is decentralization, or freedom, or it's the best thing ever. But there's no metric. There's nothing you can measure. And so at the end, this is just people kind of bypassing that they don't really have a parameter to kind of measure. So these are the really terrible ones. When you see people kind of talking about those, it's either they have no clue, they haven't thought this through, or they just don't have anything. And or a combination of all three, of all those. Okay, so let's look at the okay ones. Now, there's a couple of okay ones, and they're not really good, but I think they are usable. developer activity. Now, this is an okay one. It's not a great one, but at least it does something, right? Work itself is not necessarily valuable. It's useful work that's valuable, but I would say in any project, if work is being done, it shows something. It's probably that lack of it is bad, but just having it is difficult to kind of say something about it, right? So I think this is the key thing in all this. Now, one other thing is we could measure points of acceptance. Now, for example, we could look at ATM charts, how many ATMs are being put up, how many actual points of acceptance are there. Now, we could look at that. Sometimes also a bit tricky, gameable, difficult to measure. There's not a unified standard. Other things, we could look at the community, we can look at how big social media accounts grow, how much activity is, we can look at Google Trends. Now, I get it, a lot of those things are not really, really strong. But on the other hand, if these things are going down, this can also be quite a difficult sign. And I think it's actually a similar one here. For example, if transactions or the value is actually going down, this may be actually a bad sign, but it's difficult to give it anything that's good. So that's just something to kind of consider. Now, one thing that is to a certain extent interesting is how many fees are actually paid to miners. Now, the reason why I give this some value is because someone is only going to pay fees if they find something useful. The problem about it, though, is that these fees are in a circular, there's nothing burned, nothing is used up, right? So the miners, all they do is they just sell these things on the open market. So it is a net zero. There's no, it's different than actually using something up. Like when we talk about Ethereum or then also DeFi chain, you'll see there's actually a component in there where stuff is used, where there's a burn, for example. But here, there's no real value capture. But at least it tells you something, right? We saw this with ordinals in May 2023. This was quite powerful. Suddenly, mining fees went up. And so this was quite good at the end. And the last thing is looking a bit at the mempool. Now, obviously, if the mempool is really full, that means there's a lot of activity happening. But it's also sometimes a bit tricky because it is gameable. I don't think it is getting gamed, but let's say this were a key metric, it would get gamed. And so I do think there's some value in it, but at the end, it's very, very difficult. And you will see people talk about Metcalfe's law and so look at the network effects. But the question really is, how do you measure those? What are they, right? Where do you see them? And it's actually very tricky and difficult to actually look at that, right? So I want to be very clear just because there's so much bot activity and it's just so difficult to kind of identify unique users in the network, right? And so then, and just the user doesn't really mean anything. Is the user actually using this thing, right? And what does usage actually mean? And so this brings me to the 3 gold standard parameters for Bitcoin. And they depend really on the utility. Now, if you're the person who thinks that Bitcoin is a currency, well, you would have to look at the GDP of Bitcoin. And the thing is, though, what are the things that are actually priced in Bitcoin? And you would have to look at the kind of economy of things that are truly priced in Bitcoin, not priced in dollar, and then you get a conversion rate, and the shop then accepts Bitcoin but converts it into dollars. That's not priced in Bitcoin, that's priced in dollars because that shop also sells it actually right away. Actually, that you have a circular economy. And I would probably think that at the moment it's close to 0. And I think it's also very difficult to kind of measure this, but this would be the kind of idea here. And I always hear the story about this one hotel in Germany that I know accepts beer that's totally priced in Bitcoin and or the Satoshis. And I believe that. I'm not doubting that. Yeah, but I mean, if this is kind of the pinnacle of it all, then yeah, I would really think that this is 0. So I'm just kind of putting this in there, right? Now, the second utility I will see in Bitcoin is insurance. And to me, that's just a one-off. It's untested, right? So to me, this is really the faith you have there. And it doesn't really need a metric or it doesn't really need a measurement because it's just like a house insurance or health insurance or something. You only find out afterwards, right? We don't know if Bitcoin is actually a good insurance against Wall Street, especially now that Wall Street becomes, well, kind of Bitcoin itself, right? With ETFs and so on. So to me, it doesn't really need a metric on this. This one would need a metric. This one doesn't. But for me, this one is really kind of going down. Just, I don't know. I feel this is too much intertwined. So the last utility, and again, it gets back to price, but we actually have a metric there, and it's actually a quite a good leading metric, and that's quite powerful, is the money expansion. And it has been shown that the M2 money supply has actually been the number one driver for the Bitcoin price. And we have seen this, and the data on this is actually really, really, really good. You can see this with the years. Whenever money went up, Bitcoin price went up. When money compressed and went down, the Bitcoin price went down. 2017, money went up, price went up until the end of 2017, beginning of 2018. Then we had the crash down because the money supply went down. Key couple of things here. You will always need more money supply and more expansion to drive the price up just because more is in it, right? So you're going to need more and more and more in order to really drive this. But we have seen that so far, and the question really, however, becomes, can Bitcoin sustain that? The money supply, Bitcoin has outperformed the money supply. But I actually think a lot of this has to do simply because of the asset class size. Bitcoin is so small as an asset class that the money that gets printed, right? I mean, we're talking here about trillions of dollars that got printed in the past couple of years, is so much bigger than the entire kind of ecosystem here. So the question really becomes, how much money needs to get printed for Bitcoin to make new all-time highs? But I want to be very, very fair. At the moment, I'm really only going to look at two things that are going to affect the Bitcoin price. One is the hopium around the Bitcoin spot ETF, and the other one is money supply. So until money supply actually starts going up again, I'm not expecting much of a rally other than the Bitcoin spot ETF hopium. Some people have looked at are the 10-year treasury yields kind of doing this, right? So here we see the Bitcoin prices, and interestingly, here are always the yields. So the yields always trended down, and then we had the halving, and then yields started going up again. That kind of always been helping, coinciding here with the halving cycles and the treasury yields. So, but it hasn't shown to work all too well. So I really think that the M2 money supply is the number one indicator. And so that's the one I would be looking for, right? That's the number, the indicator. The big problem about it is I want to be very clear that it's an outside number. And this is actually, you never want to see this actually, right? So Bitcoin itself has very little to kind of have as a number that you can track that tells you, oh, their value is going up. And maybe I don't have it. Maybe I just don't know the number. Let me know. I would love to hear your number. Please give me the metric, give me the number to track, give me the chart to track. I would love to see that number, right? I think this would be very interesting. Now, as soon as we go to other chains, and to be honest, that's the reason why I don't really invest much into Bitcoin, I'm going to use the run up for the Bitcoin ETF. Yes, but I'm probably going to sell most of my Bitcoins afterwards right away because it's so difficult for me to track actual utility in there. If I look at other chains, for example, Ethereum or Bitcoin, I have a massive difference here because I can actually look and measure the fees that are being generated and distributed to the stakers. I can also see those things that get burned, right? And especially Ethereum is a master in this. Also, DeFi chain has been burning a lot, right? So that drives up value. And obviously, the more people are willing to pay and burn, there must be some value in this. Otherwise, people wouldn't be doing this. You want to combine that with daily active addresses. Now, I get it. This can be gamed, so it has to be combined. This is still the number one driver here. But you want to combine this with daily active addresses, and you want to combine it with total value locked, something that doesn't exist on Bitcoin. And Bitcoin is basically zero, or it is zero. Here, you can actually measure all this. And you want to measure those things not in dollars, but in the native coin. So in ETH, or you want to measure this in DFI. So to have a better kind of understanding. And it all needs to start here. So as soon as, for example, right, if fees burned goes down, the other metrics don't really matter much. This one is the key one. But what you want to see is you want this number to go up while this number goes up and while this number goes up. If all three numbers go up at the same time, this is insanely powerful because this means more things get burned by more people with more assets and funds entrusted into that chain, right? And so Bitcoin can't do this. That is mostly why I'm betting on Bitcoin, on Ethereum and DeFi chain. By the way, two really interesting trading ideas here at the moment. Ethereum futures ETF may be coming out relatively soon. This could cause a massive rally. DeFi chain meta chain layer could be coming out soon, could cause a massive rally. So I am dollar cost averaging on bake into both of those. You can also dollar cost average into Bitcoin if you're betting on the Bitcoin spot ETF. That will be a 3 to 6 months bet. Very, very, very interesting bets here that are going on at the moment. So yeah, these are my thoughts in this. Let me know what you think. These are the measures, the numbers, the metrics. If I miss anything, do you have better ones? Let me know about those. Then I would love to kind of track them as well. And if you get value out of this, let me know. Give me a thumbs up, click the subscribe button, and then I'll see you next time to get you crypto fit. Thank you so much. Yours truly, Julian. Bye-bye.